So here we're continuing our discussion of AUC Section 315, understanding the entity and assessing the risk of material misstatement. And we've been going through the components of internal control. And for this video, we are looking at the control activities relevant to the audit, which is a component of internal control. And so although this is a very small area of information, there's actually a lot here that we need to understand the buzzwords that make it up. So in the last video, we talked about the processes. So initiating the transactions to go into the general ledger, for instance, so the accounting processes. But here we're specifically looking at control activities within those processes. So they can kind of be similar, but the controls will be different because it's a checks and balances to make sure that the process recorded the transactions appropriately. So it says here that we should obtain an understanding of control activities relevant to the audit, which are those that we judge to be necessary to understand so that we can assess the risk of material misstatement at the assertion level and assign further audit procedures responsive to those assessed risks. So we're not necessarily testing these controls. That would be determining whether they are effective. We're just trying to understand their design and whether they're implemented, and that would help us to assess the risk of material misstatement. So if they're not designed appropriately, maybe those transaction classes might be a little more risky as far as where material misstatements might be. We also see it says assertion level. So this is at the individual assertions, not necessarily at the overall financial statement level, which we would have considered with some of the other components of internal control. For instance, the tone at the top is more related to an overall financial statement level, but these controls are related to the assertion level. And based on this, we can design further audit procedures to respond to the risks that we determine. And so it says here we don't have to understand all of the control activities that are part of the entity under audit, but only the ones that are related to significant classes of transactions, account balances, and disclosures. And we don't have to understand them for every single assertion either. So we mainly want to look at the ones that are most relevant or that are most significant to our audit. So we might determine that by, say, for instance, the number of transactions. So if a transaction class has a very material amount of transactions that happen, maybe we want to understand those particular control activities, or maybe it's a material balance. We might want to understand those control activities. And it also says that even though we may not understand the control activities for every transaction class account disclosure, we definitely do need to understand how they reconcile the detailed records to the general ledger for material account balances. So that would be a must, or a minimum, I suppose. And then for the very significant account balance transactions and disclosures, we want to understand the individual controls in addition to how the schedules are reconciled to the trial balance. And it also says here that we need to understand the control activities that are related to IT as well to assess the risk that accounts might be materially misstated. So we've got a lot of information here. Explanatory material sections 102 through 113. So let's go down to those and see what additional information they have here to help us comply with these requirements. Okay, so now we're continuing in the explanatory material here, section 2, as it relates to the control activities, one of the components of internal control that we've been going through. So here we'll get a little more color on exactly what to do when we're gaining an understanding of the entity's control activities. So first, it gives us sort of a definition of control activities. So that would be activities are the policies and procedures that help ensure that management's directives are carried out. So those could be IT controls or manual systems. So some examples would be authorization controls. So for instance, someone signs off and authorizes a transaction to be performed. Performance reviews to see that the employees are performing their jobs adequately. Information processing, physical controls, and segregation of duty. So as remember, we're only supposed to gain an understanding of the control activities that are relevant to the audit. And so here they have sort of a definition of which control activities would be relevant. And those would be ones that are required to be treated as such from paragraphs 30 and 31, which we haven't gotten to yet. But there are certain controls that are required to be treated as relevant to the audit in certain situations. We'll get to that later. But so it's saying here that those would be relevant to the audit. And then also ones that we consider to be relevant using our professional judgment. So next it tells us a little bit about when or how our professional judgment might decide when a control activity is relevant. So it says that a relevant control activity might be one that is influenced by a risk that we have identified that may give rise to a material misstatement, and whether we think it's appropriate to test the operating effectiveness of the control in determining the extent of substantive testing. Since we've reiterated before, this gaining an understanding of the control activities is not testing the internal controls, which would determine their effectiveness, but it's rather gaining an understanding of how they're designed and whether they're implemented. So, of course, if we decide that we want to test the operating effectiveness of a control, we definitely would need to gain an understanding of that one. And I think that's what's being said in this paragraph. And so it says here that, of course, the relevant control activities are likely ones that are in areas where we think the risk of material misstatement is higher. And if multiple control activities achieve the same objective, then it's not necessarily appropriate for us to gain an understanding of each and every one of them. We can maybe look at them as a whole or just one of them, as long as it achieves that objective. Another example of a control activity that might be relevant to the audit may include controls established by management that address risk and material misstatement related to disclosures not prepared in accordance with the appropriate financial reporting framework. So we're not only looking at just the financial statement line items, we're also looking at the disclosures of the financial statements to make sure, to understand what controls are in place to make sure that those disclosures are made appropriately. Perhaps management has a disclosure checklist that they use to make sure they've included all of the disclosures. And so we should think about this in relation to the other components of internal control. So for instance, if there's not appropriate control activities for certain functions, then perhaps there may not be appropriate controls in the other components as well. So we just need to be mindful of how this all relates together. And so next, as we remember, we were required to gain an understanding of the risk arising from IT and the general IT controls, and these are discussed now. So first, it summarizes a little bit of our risk from IT and what constitutes effective controls. So controls over IT systems are effective when they maintain the integrity of information and the security of the data that such systems process when they include effective general IT controls and application controls. So certainly if the data and information within the IT system does not have integrity, or that there's a possibility of it being incorrect, then certainly there's a risk that incorrect information is being used to go into the financial statement. So we want to make sure that the general IT controls are solid. And so the typical controls in an IT system might be the data center and network operations, system software acquisition, change and maintenance, program change, access security, application system acquisition, development, and maintenance. So we want to gain an understanding of how each of these systems is secured. For instance, if there are changes to the software, then who approves those changes and makes sure that the information coming in and out is accurate after the change. Also, making sure that perhaps the right people have access to the right information, and the people that should not be making changes in the system or to the data do not have access to those positions. And also, there should be controls in place perhaps to determine what types of software should be purchased and how it's developed and maintained and such. So these are all very important things to understand the integrity of the data that's going into the financial statements. So it says that although general IT controls being ineffective would not in themselves cause misstatements, but it certainly is a risk if the application controls are operating improperly because of that, and there ends up with misstatements in the financial statement. For example, if deficiencies in the general IT controls over access security exist and applications are relying on those general controls to prevent unauthorized transactions from being processed, then the general IT control deficiencies may have a more severe effect on the effective design and operation of the application control. So therefore, we need to look at the general IT controls in conjunction with the applications and data that go into the financial statements. For example, if no new systems are implemented during the period of the financial statements, then the deficiencies in the general IT controls over application systems, acquisition and development may not be relevant to the financial statements being audited because we didn't implement any new systems, and everything would be going the same as it was before, and so there wouldn't be a risk of new systems causing change. And so that was the general IT controls. Now we discuss the application controls. Those could be either manual or automated, and they operate at the business process level and apply to processing transactions by the individual application. And so application controls relate to procedures used to initiate, authorize, record, process, and report transactions or other financial data. So they help ensure that the transactions occurred or authorized or complete and accurately recorded and processed. So that might include edit checks of input data and numerical sequence checks for manual follow-up of exception reports or correction at the point of data entry. So these are controls that ensure that the data going into the system is appropriate. So the general IT controls we might think about those as controls that ensure the output of the system is accurate, whereas potentially the application controls might ensure that the input of the data is accurate.